There is wide convergence on the fact that there should be some reform of the tax and financial reporting system. There are some proposals which have been discussed today from the European Commission concerning simplification, simplifying reporting requirements, filing requirements, introducing exemption from filing and reporting, and introducing exemption from auditing. So this is probably the more conventional approach, which has long been discussed by now in Europe for many years now. There might be some risks arising from this. There might be less transparency in the market because publishing audited financial statements foster a culture of transparency and also makes rating of credit worthiness and commercial transaction much easier. And also there is a risk that access to finance might become more difficult because banks, not everywhere, but in many countries I know, tend to rely on financial reports and audited financial reports before they make a decision on extended credit, especially to an SME and SME enterprise. And access to finance is a critical factor for SMEs, and even more so during these times where we have a liquidity crunch. There are new needs arising. At the European level, we are hearing talks about the need for a unified fiscal system, which might involve more strict fiscal discipline for the states, but also some kind of unification in this way taxes are assessed on enterprises. And probably each country will have less say in the future on taxes and spending, and we will have to accept more unified standards if we want to come out of the current crisis. There might be some old ideas helping us in addressing the issue of having two different kinds of reporting, financial reporting and tax reporting. And one old idea by now is CCCTB, Common Consolidated Corporate Tax Base. This has probably been the object of much interest for a few years. It's now been probably close to neglected because of some political opposition, but it might be something interesting to look at in the future as well. And we also might like to take a fresh look at the issue of compliance and compliance costs, because probably it is clear to us that if we require good quality financial reporting and auditing from small and medium enterprises, we are putting a cost on them, but probably we should also try to make this cost effective for them. So you can have useful costs and you can have unuseful costs. And a useful cost, as far as financial reporting and audit are concerned, could be being able to access finance in an easier and quicker way, and also being rewarded by the tax administration for being compliant and for supplying reliable data on which taxes can be assessed. Some tax administrations around Europe already have taken steps in this direction. In Holland, for example, the tax administration offers what they call an individual compliance agreement. If a company undertakes to provide a system of internal controls, internal audit and external audit aimed at preparing and filing acceptable tax returns, then the tax administration takes the obligation to adjust the assessment and the supervision to the quality of the reporting to ensure timely tax refunds, and interact a two-way dialogue with the SME. So this is a very good example of how you can get rewarded for complying and taking more costs, but also getting a benefit. In France, while there are no written rules, there is a long-standing tradition of reliability by the profession. So this is probably one of the reasons why We heard Philippe Araouz this morning telling us that in France they have 300,000 audits because tax authorities and banks and the economy relies on audits and relies on the profession. This might be a result of the fact that practitioners entering the profession in France are required to swear that they will respect the law when joining the Ordre des Experts Comptables. In Italy, tax law already provides for some degrees of some types of certification to be provided by professional accountants and auditors, like formal checks or heavier substantial certifications of tax returns or certification required when you are applying for VAT refunds. There probably is a need to streamline the system. And CNDCEC, for example, is suggesting that additional advantages be provided to companies undergoing audit by the tax administration, like, for example, the ability not to pay any assessed tax, additional assessed tax, until there has been a first-degree judgment by the tax court. So the new way forward, in my personal view, could probably be find a better alternative to reducing compliance requirements. We could surely eliminate duplicate filing of information. We could try to converge tax and financial reporting as far as possible, and this is very likely to be possible at the lower end of the market, micro entities. Maybe also develop a common tax base for corporate taxation, which would greatly help competitivity as well, and introduce advantages for SMEs that will offset the cost of compliance and auditing, including easier access to credit and acknowledgement of a higher reliability by tax authorities. I just learned yesterday at the FCM meeting that Greece is introducing a scheme whereby auditors will certify the tax compliance of enterprises. Cyprus already has this, and Turkey has a similar system. So this is nothing new, but probably it is not widespread. Well, I think I'm reached the end of my 15-20 minutes. I just would like to acknowledge the help, the very precious help of Maria Teresa Venuta, who supplied most of the research on which my presentation was based, and Federico Diomeda from EFAA, who supplied information on this tax authority approach to a more reliable enterprise through compliance. Before I finish, I just would like to warmly welcome you all to join us in Singapore on the next March 19th for the S&P Forum. You know, the IPAC S&P Committee holds an S&P Forum every year. So in 2012, it will be Singapore, March 19. It is a unique opportunity to listen, learn, debate, and collaborate within the accounting profession, within the S&P SME community. So you're all very warmly welcome to join us in Singapore. Thank you.
Thank you, Giancarlo. Looking